Hey folks, Ash from SWENGLISH here. Now, this is an interesting topic because it's all about money. And when you move abroad, when you move anywhere, in fact, you want to take your money with you. And when I moved from the UK to Sweden, I moved all of my money with me. Now, I, of course, bought a house. That's where the bulk of it went, but I did have some savings left over. And they were just sat in my Swedish bank account. And over here in a Swedish current account, or even in a savings account, you don't get any interest on the balance. And that means your money's safe, it's not going anywhere, but equally it's not growing, and that money is your future. So I thought about ways, what's the best way to invest and make money? Now, in the UK, there's lots of options like an ISA. They also have some yearly fixed schemes I had with HSBC, whereby you contribute at least £50 or £100 a month. And then after 12 months, it matures and they pay you out however much you've put in back or something like that. But during that time, you're not allowed to touch the money. And so they're quite limiting. Then I discovered in Sweden, they have something called an ISK or an ESK. And that stands for InvesteringsSparKonto. And this is something that the Swedish government introduced, I think it was in 2015 or so. And it's basically an investment scheme that's incredibly flexible. But the best thing about it is that there is no capital gains to pay, basically. So on a normal trading stocks and shares account in Sweden, you're liable to pay 30% on your profits. But with an ISK, you pay between 1% and 3%, which is incredible. Now, there are some differences here between an investing account and an ISK. One of the key differences is that the ISK, you're paying that between 1% and 3% based on the total value of it, not on the profits. Now, that can be a penalty if you make losses. So let's take the last month on the stock market. The US market crashed in the last month, literally dropped massively. Some stocks 30, 40%. Now, let's say the market didn't recover over the period of that 12 months beyond that, then you would still be paying your 1% to 3% on the entire value of your ISK portfolio. But the chances of you making such a loss are very slim. The last year, in fact, I would say not in the last 6 months, because markets have started to recover quite dramatically, but certainly towards the beginning of, or towards late 2019, when this pandemic started, the markets took a big crash, and they crashed for probably subsequent 8-9 months or so. So there is a chance that people may have actually made a loss on their ISKs over the last 12 months. But moving forward, hopefully, as long as nothing like this pandemic happens again in the short term or long term, an ISK is incredibly profitable because you will make money on it. Now, almost every single Swedish bank offers an ISK. All you need to do is log into your online banking, go to normally funds and savings or investing, and there you'll find the option to open an ISK, and it doesn't take long. You have to answer a few questions, and then literally it gets opened. And once it's opened, you just simply move money from your current account into it. Once you've done that, you choose the funds that you want to invest your money into. And most banks offer a different set of funds. So some will offer some Morgan Stanley funds, for example. Others will offer their own SEB or the Handelsbanken funds, but they're all different and they all have different history and track records. So look very carefully at the history of the fund. What you're looking for is a nice positive upward trend line to make sure that it's not erratic. There are low, medium and high risk funds as well. So stick to medium or low risk, depending on your strategy, but you can also choose multiple funds. So what I've actually done, I've just opened some funds again now. And what I've done, I've chosen low to medium risk funds as 75% of my fund allocation. I've then chosen 25% in a high risk allocation on the basis that, I want to hedge my bets and I want to keep the majority of my money safe from losses, but risk a little bit as well. And then basically, once you've chosen your funds, the money goes into those funds. It takes about 3 to 4 days for the money to turn into an actual stock because the bank purchase it for you. And then it's in your ISK. And then whenever you log in each day, don't do it every day, that's a bit crazy, but log in every month or log in every week and you can see the status. So you'll see maybe you've made 2%, 3%, 5%, 20%, and it's really quite exciting. Now, the good thing about this as well is that in terms of the tax element, it's all done for you. So when you get your annual tax declaration, this will all be done for you already. You don't need to proactively compute your losses, your gains, as you would do if you were doing normal stock trading and brokering. It's all computed for you by the bank. So again, another massive benefit that not only are you just paying between 1% and 3%, depending on the current government's rate, but you're also not having to do a load of accounting, and most of us don't like doing accounting. The other thing I recommend doing as well is you can put your initial bulk sum into there. If you've got some savings sat somewhere, put them into stocks. But the other great thing is you can allocate a monthly transfer. So for example, I've now set up in my bank account, just after I get paid, I move over maybe 1,000 krona into my funds account, and that automatically gets distributed into my fund allocation. So 25% of that 1,000 krona goes into my high risk, 75% goes into my low risk. So effectively, you're adding each month and automatically investing each month, which is just great. Gives you that extra little bit of security, really, and a bit of hope for the future that I can retire in 5 years. Not a chance of that anymore. I think I'll be working for the next 20 years now. But hey, now there are, as I say, also different banks have different funds, but this is the other benefit. You can open an ISK with multiple banks. So my home insurance is with Landsförsäkringar. My main banking is with SEB. They both have a completely different range of funds. And so I've opened a fund account with Landsförsäkringar as well, just because I don't like eggs being in one basket. I don't like my money all being in one place. And maybe it's a little bit paranoid, but there was a time in the UK when there was a massive banking crisis and some of the banks stopped people withdrawing their own money. So I like to, again, hedge my bets by splitting, having redundancy, basically, having two different banks. So they all have different funds, and I like to look at some of the funds in Landsförsäkringar. So I invested in one of those. Again, when you're looking to choose your funds, make sure you look at the 3 to 5 or even 10-year performance, and you're looking for a good steady rise. Now, expect to see some big dips around 2020, because obviously that's when the pandemic hit. And so, but besides that, what you want to see is that fund recovering back to the trend line level where it was rising steadily. That's the key thing. Don't just rush into a stock because one of them has made 40% in the last month. The last month's performance is irrelevant. It's the performance over 3 to 5 to 10 years. Comment below if you do need any help with stocks and, understanding what's a good fund and what's not, and I'll see if I can help you. But do your own research first. Have a look at the funds. All the banks, when they list the funds, let you dig into that fund and have a look at its performance. That's really, really important. Now, the other thing you're probably wondering is, well, how do I get my money out? This is the other great thing about funds. You can withdraw them at any point and you don't pay tax when you withdraw the money. So basically, when you want to take money out, you simply sell some of the stock. You just type in how much money you want to bring out, submit it, and it takes about a week from submitting it to the money actually being available to withdraw. So don't put all of your money into funds because that money is not immediately accessible. Only put in money that you can afford to have to wait to pull out if you need it. But as I said, it takes about a week to pull the money out, which isn't so bad. Finally, the other good thing about this is that you can open one for your child. So I've opened one for my little Ellis. You can have as many ISKs as you want. You pay obviously the same between 1% and 3% for all of them. And on a monthly basis, I automatically transfer money into his, and I've invested in he's young, he's not going to be claiming this for a long time. So I've actually opened pretty much high risk for him because, on the basis that it's a long time before he will actually have ownership of this, and I want to maximize the profits for him. As he gets older, I'll change the funds, and you can change any of the funds at any point. And all it does is reallocate your money from the fund it's in now to the new fund you've chosen. So you can start high risk, see how it goes, make a bit of money. If you know the market's crashed but starting to recover, you can open a high risk fund. And then once it's recovered, transfer it to a low risk fund. Anyway, ISKs are brilliant. Hopefully this has helped. I'll put links in the video description to help guide you guys on what to do next. Comment below with your thoughts as well. Give this video a thumbs up. There's the doorbell. Cheers, folks. Bye-bye.